Great, awesome. Welcome to the Preeminence podcast. This is a platform where we actually celebrate individuals who, I guess, defy conventional thinking, excel in their fields, and massively shape their industries. Today, I'm actually thrilled to introduce a guest who embodies this to the fullest. I like to think of her as the Iron Woman of our time. She's an entrepreneur. Some people call her Space Mom. She's a business educator, and from my perspective, really a true pioneer. She's co-founded, I'd say, one of the world's longest running space business plan competitions, and has really been instrumental in shaping the trajectory of numerous startups from inception all the way to business success. Right, Megan and her team, they currently have investments in about, if I'm not mistaken, 20 plus companies. One of them including SpaceX, which everyone is probably aware of by now. And they've actually exited one of those companies for God knows how many millions. Okay, and it actually does get worse because she's actually a board member on 5 plus companies, if I'm not mistaken. Megan, is it 5?
Yep. Yeah.
So she's a board member on 5 plus companies. I don't even know how she does that, but I mean, you think she probably have her would have her hair all lost by now, eyes pale. But I mean, she looks beautiful, great. So obviously, it's not running a burden on her. And she actually has a podcast also named Mission E Podcast, where she actually amplifies the voices and achievements of other women, foregoing past in the aerospace. So without kind of giving you a long, watered down introduction of Megan, because I obviously did a bad job. She's accomplished way more than this, obviously. But yeah, I just really want to welcome Megan to the pod. Welcome, Megan.
Well, thank you so much for having me, Robin. And that was a
Uh,
wonderful introduction. So,
no, thank you
you
for
did a
that.
great job.
I appreciate it. And yeah, Megan, actually before we even got into this, we actually had a weird introduction because Megan came on and I was complete, I wasn't even aware she came on and all that kind of stuff. But cool. Megan, so I guess I'm just gonna kind of preframe this a little bit. In terms of the pod, how we want to kind of conduct this, I guess number one, we just kind of really want to understand, I guess, we want to, I guess, dive into your trajectory, your career journey, gather some insights from you, because from our perspective, the only way anybody can actually exceed or propel in life is through feedback, right? You can take that feedback either from your own mistakes or you can take from other people. And I think the smartest thing is take from other people who already went through it, so that way you can excel and actually increase your impact in the world, basically. And number two, I guess we want to kind of get some advice on kind of because I was listening to one of your podcasts you were doing with someone on the executive podcast, and you're basically talking about defying expectations. So I guess we want to kind of dive into that a little bit and kind of understand how your leadership approach really kind of works, because you're managing a lot of companies. So I'm assuming there's a lot of counseling people, kind of being their own therapist in house. So we kind of want to dive into that and understand how you kind of manage that, kind of giving them some tough love, because sometimes I guess you do need to give them tough love and tell them what they don't want to hear, obviously. And I guess number three, I want to kind of dive into, I guess, your career journey, because I did hear you speak about mentors and how they've been pivotal to your success and all that kind of stuff. So yeah, with that kind of being said, I guess the first question I do want to ask is, I was listening to you previously on the executive podcast, and you were talking about how you had a conversation with a specific counselor, and that kind of helped shaped your career aspirations and decisions. And I was kind of wondering if you could talk about that a bit so we kind of hear it.
Absolutely. The chapter of my memoirs that I haven't written yet
Hmm.
about this topic is going to
Gotcha.
be called A Tale of Two Counselors.
Hmm.
One is my high school counselor, and one was my master's degree counselor. And so my high school counselor, her job was to help me get into college, right?
Okay. Yep.
And I told her that I had this great plan for my life. My grandfather had been a colonel in the Air Force. So I had decided I was going to go to the Air Force Academy, fly a fighter jet, and then start flying the space shuttle, right? I had this
Oh.
great career trajectory plan.
Okay.
And my high school counselor had the unfortunate job of telling me that at that time, women couldn't be fighter pilots.
Oh.
And so I had to complete, and that had never crossed my mind that as a woman I couldn't do the
I'm
job
learning
that I
that
wanted
now.
to do.
Never aware.
And yeah, so that unfortunately that's not the case anymore, but it
No.
was back then. And so I had to kind of reassess my life. I decided to go into the field of business, get my degrees in entrepreneurship and finance.
Hmm.
And then as I was getting my master's degree, I was talking to another counselor. This time it's a counselor who's trying to get me a job after my
Yeah,
master's degree.
after your master's.
And I told her what I wanted to do, and she said, "Megan, you sound so bored. I'm so bored just listening to you talk about that job. How bored are you going to be if you actually have that job? What is it that you're really passionate about?" I told her, "Well, it's always been space, but I can't be an astronaut." And so, I've just decided to kind of take this other career path. And she said, "No, Megan, you're getting a master's in business. Aren't there businesses that do things in space?"
Yes.
And it was this big aha moment for me that I had never really thought about my skill sets in finance and entrepreneurship being applicable to my passion, which was space. And so I was able to carve out a very interesting niche for myself in this industry based on that, really valuable advice that I got from Marie Bergeron at Rice University. Shout out to Marie.
Shout out to her.
She was fantastic. Um, and so that really changed the trajectory of my career. And I also like to say that my perfect job didn't exist, and so I created it.
You created it.
I went out and found the niche that was right for me in my
Mm,
industry, and I'm very grateful that not only was I able to do that, but I've been able to be successful at it. And I think there's not
100%.
very many people in the world that have that opportunity, so I'm very grateful for it.
Most definitely. So it seems like you basically you combine your skill sets with your passion basically, and create something out of it, right?
Exactly.
100%. Gotcha. That is. But how does someone? How would you say? How does someone basically? Because you seem like you were really passionate about it. You did carve a way out for your own. You made your own pathway. How does someone identify? I guess or be able to kind of combine their passion and skill sets and know like this is the way I should go about following my trajectory. Because sometimes, yeah, go ahead.
Yeah, so I have people ask me a lot, should I get a master's in business? Because that's one of the degrees I hold. And I told them, I said, my logic always was, it doesn't matter where I work, it's going to be at
Hmm.
a business. So that skill set is going to be valuable no matter what field I decide to go into.
Hmm.
So I always encourage people, even at the high school level, take the business electives, take the economics electives. And so you understand how to create value in your company. That's the best way you're going to be successful. It's the best way you're going to be promoted
Hmm.
within any corporate structure is by creating value.
Hmm.
And so if you have that kind of basic business skill set, then you can go anywhere and do anything. You can start your own business, you can help grow an existing business. And so for me, that was the real aha moment is that business skills are kind of infinitely transferable to any business, right?
Hmm. Hmm.
And so it's really about, though, figuring out what your passion is. A lot of people don't necessarily understand that, the accounts that you're following on Instagram or TikTok that you're just totally hooked on, right? What are those topics that you're passionate about? And should you start a clothing line for, clowns
Hmm.
with yellow hair or whatever
Hmm.
whatever it is that you're
Hmm.
looking at on the
100%.
internet all day, right?
Hmm. Yeah,
And for me, that was always space.
that was whole space. So for you, basically, it seems like it was something that because you said yeah, you did have your family members did have a history of basically being in the Air Force. So
Yeah,
I
my
guess that
grandfather
does
was
kind of, yeah.
was a
Okay, that
colonel
is
in the Air Force during World War II.
so
So
most definitely.
yeah.
But 'cause you didn't mention also, I guess your early experience in like deep space industries, how it's kind of pivotal, in terms of like defining moments, or like lessons that you learned from that place. Was something that kind of I guess shaped some of your trajectory also.
Yeah, there were two really important lessons that I got out of my time as Chief Operating Officer at Deep Space Industries. Deep Space Industries was an asteroid mining firm. And one of the biggest lessons is that we were way too early. We had a great plan, we had great technology, but the market didn't yet exist for the product we were trying to sell. We were probably 15 to 20 years too early for the market. And so market timing is something that's got to be very well thought out with any new business. Is the market going to be too saturated by the time you enter it? Is the market going to not exist yet at all by the time you
Hmm.
enter the market?
Hmm.
And getting that timing right can be very difficult. So I
Hmm.
learned a lot of valuable entrepreneurial
From.
lessons around that.
Hmm.
And then probably the most important skill that I learned there was as a non engineer. figuring out how to manage engineers
Yeah.
and scientists in a way that can orient them towards the goals of the business. Engineers and scientists tend to be excellent at problem solving, and they always want to solve the next technical
Yeah.
problem.
Problem.
But maybe the next problem the business is facing is a marketing problem or a finance problem. And so orienting those folks who tend to have their head down solving these difficult technical problems towards, wait, no, I need you to take the afternoon off and do this interview for me because it's important that we get this idea
Yeah.
out there and you
Yeah.
can go back to the lab and finish your tinkering. No
Mhm.
offense, but I don't mean to dismiss it.
Yeah.
And so that was a really hard lesson for me to learn,
Hmm.
and one that I've carried with me. And like you said earlier, managing all of these different companies now, having a lot of founders that come from a technical background, that skill set of being able to orient them towards the business side has been extremely valuable in the long run.
Definitely. No, just I guess piggybacking on what you said about the timing, because I know when it comes to investing, is very very crucial, to not be ahead of the curve. Sometimes too much ahead or too behind is really not good at all. But in terms of because I know you mentioned something about tech, team and timing as crucial factors, in your investment thesis or decisions. Could you kind of like elaborate, I guess, on like how you assess these aspects when like considering potential investments? 'Cause I know like there's a lot of people, pitching you guys all the time about, their services and whatnot.
Yeah, there are. So since we founded SpaceFund in 2018, we started making our first investments in 2019. So we're a good 5 years in now. We have analyzed over 1,000 space startup companies
Wow.
and made 21 investments. So that's about 2%. So yeah, so that is a lot of information to go through and to try and be considerate about all of it and considerate to all of these companies. And so the three main factors that we look at are tech, team, and timing.
Yeah.
Now, obviously, we can get much more granular on that, but at the highest level, from the technical perspective, I always like to quote one of our advisors and my friend, who is the commercialization manager for DARPA, the Defense Advanced Research Projects Association. His name is Dustin Boyer. And he says, if the technology purports to break one law of physics, fine, we'll give it a shot. If it purports to break two laws of physics, okay, now we've got a problem, right?
Yeah, that is true. First principles.
Yeah, right. So we need to make sure that the technology is actually viable. It can actually be built. That the materials needed to make the piece of tech actually exist and are available. All of that sort of stuff. Is the technology real? Can it really actually create a sellable product?
Hmm.
Then the team, we look most for coachability and credibility. People who are credible, they have the right background, they understand their tech, they understand how to run a business, and they most importantly understand their customer.
Hmm.
But that they also need to be coachable, because not everybody knows everything all the time, and you need to be able to take instruction, to take coaching.
Hmm.
And this kind of plays into, I think, the other topic about how do you manage these entrepreneurs.
Yeah.
It would be impossible if they weren't all
Yeah.
coachable,
Coachable.
right? And so that's a really big factor on the team. And does the team function well together? Do they play nicely together?
Yeah.
And then for the timing is what we were just discussing, this
Yeah.
market timing. Does the market exist? Will it exist when the product's ready? Sometimes with space companies, we're looking at 3 to 5 year timelines between the investment and when the product is available in the market. And so that's always a moving target. And
Yeah.
it's very hard to gauge whether or not the market is going to be ready for the product at the time the product is ready for the
Yeah.
market.
That is true.
And so there's a lot of just our own background, our own understanding of the marketplace and where it's going that factors into that. And a lot of it is just gut instinct
Hmm.
that, this product is so good that the market is gonna want it and need
Behind.
it. And we
Gotcha.
don't see anybody else being able to get a better product to market
Mhm.
any faster.
Hmm.
So that comes from the background, the knowledge, and just the gut.
Gotcha. Well, so with these products, by the way, how do you guys ensure that whatever you guys are investing in, like a competitor or someone doesn't come and supersede what you guys have invested in? Because I know sometimes with investments, obviously, especially in the SaaS space, you guys are in a venture capital space, but obviously you guys are in a completely different realm. But sometimes people come out with products, for example, and then all of a sudden, even though they pioneered it, then someone will just come and piggyback off of what they did and just completely supersede them, and then they completely take over the market share. You know?
Yeah, that's always a risk with any sort of business investing because no matter how good an eye we have on the space startup ecosystem, there's always companies that are in stealth that are flying under the radar
Yeah.
that we're unaware of that could be potential competitors
Hmm.
to the companies we invest
Hmm.
in.
Hmm.
And that's just the nature of investing in disruptive technology. You're investing in a company that's trying to disrupt the current marketplace, and who's coming behind them to disrupt
Hmm.
them, right?
That is
And
true.
so looking for long-term competitive advantage is
Yeah.
definitely one of the markers
Um,
that we look for.
mo-
And what's unique to the space industry is that worldwide, if you take the entire space industry in the entire world, the largest single customer by far is the US government. By
mhm.
some estimates, 20 to 30% of the global space economy comes from US government dollars. So we look for companies that have strong traction with the US government because if the government wants their product, that's a great market signal that
Yeah.
they'll at least have that anchor customer.
Most
But
definitely.
they have to have the commercial side of it as well. They have to have a product that can hit both markets. And the government market is a little bit easier to understand. The government's very clear about what they want.
Yep.
They give these companies early grants to help develop the technology. That's an excellent market signal. The government wants to buy the product. And then we have to determine on the other side, do we think there's a commercial market for this product on top of that that can really help us get to those exponential growth curves that we look for
Most
in venture
definitely.
capital?
That does make sense, honestly, thinking about it that way. I mean, it is true, the space technology has rapidly been evolving. I mean, thanks to people like you, of course, right? Is impacting markets in really in dynamic ways, but I know there's a lot of challenges. That's why there's really not a lot of people in the space also, right? There's a huge moat around it. But what would you say is like, in terms of like what are some of the biggest challenges you've observed in like the space industry and like, I guess, how do you guys navigate through all of this with your portfolio of companies?
So most traditionally, venture
Mm.
capitalists are mostly thought of as being software
Yep,
investors. This
100%.
is where Silicon Valley really blossomed, was software investments,
Yeah.
Microsoft, and all the brand names, right?
Yep.
Um, so what we do is mostly investing in hardware, which is a little bit different business model. And
Difficult.
some of the biggest, I guess, difficulties with investing in a hardware focused market, one of them is time to market. Whereas a software platform can be built by a very small team in a matter of months, space hardware usually requires a larger team, a big lab. So you got more upfront costs. You might have 3 to 5 year timeline before the product gets to market.
Mhm.
And so it's a fundamentally different risk profile than traditional software-based venture capital investments. Is that you have to be aware of this longer time frame to profitability.
Yeah.
But once you get to profitability, the numbers are much
Yeah.
higher than, selling a
Makes
piece of
sense.
software. And so it is kind of a different gamble if you look
Mhm.
at it that way, right?
Yeah.
It's a different game at the casino, right? You're still gambling, but you're gambling in a little bit different way strategically.
Most definitely. I think I heard you also talk about basically like, when, because I know tech, timing, coachability, all that's kind of important. But I think I heard you say something about basically how if a company, before you guys take on a company, you'd basically do some kind of assessment whereby if the company needs, let's say, for example, $1 million to basically go to market or whatnot, you would kind of like triple the amount of money they say they need and kind of I guess it was the amount of money and something else basically that you said. And if it's still profitable after that, then you go ahead and kind of like you guys can consider it for an investment, which is something I think that was really incredible. And you know
For
I heard
for
from you.
anybody who's a fan of In and Out, I like to call this my double double strategy, right?
Sure. Double
So
strategy. Let me write that down.
so whatever a company thinks it's going to require in time and funding in order to get to market, we double time and we double funding. And funding is a function of time, right?
Yeah.
Because you have to pay salaries every month. So the longer it takes, the more money it's going to take. So double if we can double the time to market and double the funding to market, and the company still makes financial sense, then we will consider it.
Mm.
And this is again just from years and years of experience and watching so many of these companies develop. There's always unknown unknowns. There's always unexpected things. And think
Mm.
about, could anyone have predicted COVID? and
Yeah.
how COVID was going to disrupt supply chain lines and put
Right.
these companies months, if not years, behind schedule because they can't get the parts they need
Mm-hmm.
to build their spacecraft.
Mm-hmm.
So if you can still be viable under the double double model, then
Mm-hmm.
it's a company that we think really has the capability to go the distance. Now, we would
Mm-hmm.
love for them to come in at their original expectations, but if
Mm-hmm.
you think about really the leader of this industry, Elon Musk and SpaceX,
Yeah.
I like to say Elon always does what he says he's going to do, but he never does it on the timeline he says he's going to do it on, right? Never. Elon has never met a single one of his self-imposed
Mm-hmm.
deadlines, not a single time, right? So in this industry specifically, you have to walk into it knowing that there are so many unknowns
Yeah.
and there are so many variables that it's always going to take longer than you think.
Mm. Yeah. Unknown unknowns. It happens a whole lot. Time is a
Yeah.
factor that, I guess we're really human beings are completely bad at factoring into when it comes to, investments and stuff like that. Well,
And
cool.
that's natural. And we love to see founders who are very excited about their technology and excited about making technical progress.
Yeah,
And that's great.
that's
We
great.
want to see that enthusiasm. And then it's my job to be the pessimist and do the worst case weather scenario analysis,
Someone
right?
has to
So,
be right. Bearer
yeah,
bad news.
exactly.
Gotcha. So I know building a cohesive team in startups is really, really important because, it's the people that actually, move the needle and get the stuff done. So what kind of strategies have you found effective, fostering, I guess, team alignment and I say maximize productivity, especially, because from my perspective, like the space field is probably, in comparison to venture capital in, San Francisco, this is a different ball game. You guys are actually on a different, like you said, it's a different casino, right? So it's
Yeah.
a bit harder.
Yeah, so you're right. Fostering teams is one of the most important factors in a startup being successful. And that's why we look so deeply at the team before we make an investment. And usually this comes down to leadership.
Mhm.
And so having a coachable leader doesn't just mean that that leader will take coaching from me as a board director. That also means that leader will take coaching from the person who works on the factory floor, who says, you know what, there's not enough water pressure in the showers. Okay, and so being able to have those sorts of minutia
Mhm.
concerns that doesn't seem big, to the venture capitalist. Do I really care about the water pressure in the shower? Actually, I do, because if your team is working with hazardous chemicals and needs to shower off twice a day, and it takes 30 minutes for them to shower instead of 10 because of your water pressure, now we're talking a productivity issue,
Yeah, most
right?
definitely. That is
And
true.
so
Bigger picture.
those sorts of little things do matter, and a coachable leader will be able to understand what their people need when they need it
Mhm.
and deliver that to them to keep that workforce cohesive and engaged.
Mhm.
And space is hard. It's a turn
Yeah,
of phrase we
it's
use a lot in this industry. So
mhm.
being able to have that team cohesiveness and keep people motivated, because you will fail.
Yeah.
Failure is not an option, is another thing we say in this industry, but no, you have to fail.
You
You have to move fast and break things.
look
And
for
so
it.
it does take a special type of person to live with the amount of uncertainty in any startup,
Mhm.
but the amount of uncertainty in a space startup is
Mhm.
even higher. So having
Gotcha.
those people who have that kind of innate flexibility to
Hmm.
live with uncertainty is another factor that we look for as well.
Most definitely. I mean, just building upon that. I mean, uh, what you said are some common pitfalls that some entrepreneurs should be aware of when it comes to the space sector. Because I mean, it's a different ballgame, obviously, and there's not really. I've done a lot of research, and there's not really a lot of people on the trajectory that you're on talking about it, advocating people on doing it. So there's really not a lot of information out there in terms of hey, this is what you watch out for, all that kind of stuff.
It's a great question. And the reality is, we talked about the double double model,
Yeah,
right? It's always
double.
going to
Yep.
take longer and cost more than you
Yep.
think.
Capital time.
So
Yep.
that's a big part of that. And then really it's about what we see is, again, this enthusiasm amongst founders. Like, I have solved this big problem and I've got this great technology. And oftentimes they don't talk to their customers. So that would be the other thing that I would caution on. And I'll tell just a quick little story here if you don't
Okay.
mind.
I want
I
to.
was approached in a lobby of a conference some
Okay.
many years ago by two students who were just graduating with their PhDs. And they said, we
Okay.
figured out this really amazing technical problem and we want to bring it to SpaceFund for
Mhm.
funding. And I said, great. It does sound like a great solution to an important technical problem.
Yeah.
How many of your customers have you spoken to? And they went all like white in the face, big deer eyes. You know what I mean? No, none. I said, great, go talk to your customers and come back to me.
Bye.
They came back to me about 18 months later and they said, we have talked to 300 customers. And based on their feedback, this is how we're modifying our product to fit better into our customer supply chain.
Beautiful.
There you go. We wrote a check. Okay, that's one of our portfolio companies now. Because one, it shows coachability, and two, it shows that they have done that market analysis to create the right product for their customer, not just the right technical solution that works
Most
for their
definitely.
PhD
Most
thesis.
definitely.
And so they took that leap very gracefully and very well. And so that was all it took for me to believe in them as founders.
Most definitely.
So doing that market analysis is something that a lot of people often skip because they think, oh,
Yes.
it's so great, everybody's going to love it, right?
Yeah.
Well, but do they love it better if it's purple or if it's red? I mean, that's a
Yeah.
consumer product.
Yeah.
That's not
You
quite
get
the
that.
right
Yeah.
analogy for the space industry, but having
That's it.
that integration with your customers is extremely valuable and a step that you cannot skip.
Yeah. I think especially in the SaaS space, because I know people that do a lot. Sometimes, they either send people emails or forums and stuff like that. It's very, really crucial to get people's feedback because at the end of the day, uh, once I tell people, you can't sell someone a solution to their problem if you're not solving it the way they want it to, how they want it, and all that kind of stuff. You need to identify how they want it exactly, when, how, and where. So that way, when you're actually giving this product to market, they're gonna take it with full arms, right?
Right,
But if you're just
exactly.
100%, so that's definitely that is true. Okay, gotcha. So in terms of because I know you said you did face some skepticism about pursuing, because this once again, like there's not really a lot of space moms in the industry, it's very few of them. So when you were like kind of pursuing the aviation early on, um, how did you kind of overcome those doubts though? Because the advisors are there obviously, but internally, I guess, what advice would you give to other people, like just like how they kind of overcome? Because there's some people who want to obviously get into the space, but they probably think it's just impossible just due to the fact that there's not a lot of people in the space, or it's really hard. I guess what kind of advice would you kind of give to them in terms of, hey, this is how I overcame it. This is what you could possibly do for yourself also.
So this is a message that I love to tell the world is
Okay.
that whatever it is that you do,
Hmm.
space needs you. This industry is growing so rapidly that it needs everything from teachers to accountants to
That is true.
marketing professionals, PR professionals. I like to say, because I grew up in Houston, Space City, but
Oh
also the
wow.
oil and gas capital of the world. So
Yeah.
whatever job you have working at an oil and gas company, you can get the same job in the space
Most
industry.
definitely.
And if this is the industry that inspires you, do that. Find your
Hmm.
skill set that works for this industry and bring it in. And this is one of the reasons I started my podcast.
Hmm.
Although my podcast is focused on women in the
Yeah.
aerospace industry,
100%.
I think that it's very important to hear these stories. One of my favorites was a woman who had started her career as a yoga instructor and ended up as the CEO of a space startup. Right?
Wow.
So people's career paths can
Can you
be
give us
absolutely.
a little, I guess, depth paragraph about how she from yoga to CEO of a space company? That's different.
It is very different. It is very different. And I'll make you go, I'll have you go listen to the podcast. Kelly
Most
Larson was
definitely.
the name of the
Her name
guest on the
was
Mission Eve
say
podcast.
Kelly. So her name
Kelly
was Kelly.
Larson. Yeah.
Kelly Larson. Okay, so anybody else
And
listen, it's Kelly Larson on a Mission Eve podcast.
yeah, so, but
Yeah.
there's dozens of fascinating stories like that about people who come from all these different walks of life, different
Hmm.
backgrounds, different countries, different
Hmm.
upbringings, who find their niche in the space market.
Hmm.
Everything from policy, public
Hmm.
policy, and changing the way rules work to make it easier for space companies to exist,
Yeah.
to education, teaching space cadets at the Air Force Academy, for
Mhm.
example, and preparing them for this new world of a commercial space industry.
Most definitely.
There's just all of these different roles and functions. And
Hmm.
most people do look at the space industry and they say, oh, that's above my pay grade, or oh, that's too hard. It's not. This is an industry just like any other, and we are hiring. One of our biggest problems across the portfolio, all 20 companies that are still in the portfolio, have had trouble hiring enough people. There's
Wow.
not enough people applying for the jobs that are on offer.
Look
And
at
so
that.
go to the SpaceFund website, click on every one of the 20 companies in the portfolio and
Most
look at their
definitely.
open jobs, and I bet you'll find
100%.
something that's right for you.
100%. That could be even if you're someone who's aspiring to be your own CEO one day, that could be, you know, a beginning basically for your journey. Just starting within a company, seeing how it kind of runs, then eventually, I guess, starting your own and having Megan, of course, and her company invest into it, which should be probably the best approach, actually, honestly, thinking about it.
So my
Um,
first space industry job was I was hired as a consultant to do public relations for
wow,
a firm called
PR.
Deep Space Industries that we've already talked about.
Yeah.
And then eventually I became the marketing director. And then
Hmm.
eventually I became the COO, the chief operating officer.
Look at that.
And so you have much more upward mobility at a
Hmm.
startup
Yeah.
because the layers of corporation are flatter, right?
Hmm.
It's not as much of a pyramid, it's more of a
Hmm.
block, you
Yeah.
know?
Yeah.
So you can move up it much faster if you're in a startup. And that was what really launched my career was just getting my foot in the door
Sure.
as a 1099 contractor, helping them
Mm.
write press releases. And next
Wow.
thing you know, I'm chief operating officer about 2 years later.
Wow.
And so that's the sort of career trajectory you can
That's
have if you
beautiful.
start working with a small company. Now, there's a lot of risk that
Yeah.
the company's going to go out of business, right? Okay,
Yes.
so you have to have
Talk about that.
that risk tolerance, right? But there's all sorts of opportunities to start small and work your way up
Hmm.
in this industry, especially as it's growing so rapidly.
I mean, just I guess picking back off of that in terms of like, because I know, any kind of endeavor in life, it doesn't matter if it's business, spouse, anything, there's always setbacks, right? So just to reflect on your experience per se, what would you say were like you could say one of the biggest setbacks, or like what was one of, if you can remember, biggest career setbacks, and I guess how do you kind of bounce back from it? Because as entrepreneurship and you're just trying to be a preeminent individual, we're constantly facing adversity, we're constantly facing resistance, and it's just like the world is just trying to pull you down, or you're just trying to go up. So what would you basically say about that?
I'd say probably the single hardest thing I've ever done in my career was raise my fund one for
Oh wow,
SpaceFund. Okay,
talk to us.
so space venture capital didn't exist. It wasn't a thing, right? And
Can
raising
I?
for a space startup is really hard, but raising capital for a space venture capital fund is something that nobody had ever heard of. They'd heard of
You
SpaceX, they'd heard of Elon.
Let me even cut you off. You were the first person that I found out about even space funds, because usually venture capital nowadays is just branded by San Francisco. It's just tech companies, B2B companies, mainly B2B. They love B2B. So I'm like, she's in a venture capital space, and it's space. I have to talk to this lady. It has to be. I was just like, this is
Well,
different.
I'm glad you reached out. It is different, and it was very different in 2018 and 2019 when I was raising my first fund. And we had originally set out to raise a $50 million fund.
First
And
fund,
then we
50 million.
decided 50. And then we decided, well, that would require institutional investors, and institutions just aren't quite interested in space yet. So let's raise a $10 million fund and focus
Okay.
on high net worth individuals and family offices to provide that capital. So we figured
Okay.
we'd get a little bit more traction with individuals that we could actually talk to as opposed to large institutions who would have to completely shift their strategy, right?
Yeah. Yeah, that's
And
true.
that did start to work. That started to get us a little traction, but not as much as we had hoped. And so we ended up raising a $1 million fund for our fund
Okay.
one, right?
1%.
We had started trying to go for 50 and
10%.
decided to raise a $1 million fund instead
Okay.
and use that money to prove that space venture capital could work.
Most definitely.
And then 9 months into our fund one, we had our first exit, which was
Wow.
when Made in Space was sold to Redwire. And one of the biggest pushbacks we had gotten from investors is that we just don't see a path to exit for these startup companies. We don't see how we're going to get our capital back. And then boom, we got that exit so early on in
Nine
the
months.
fund. And really that started to prove our thesis. Then we started to see these companies that we were invested in, their valuations get higher and higher and higher as the investment market started to warm generally towards space companies.
Hmm.
And so, of the 20 companies in our portfolio, all 20 of them are still alive.
Yep.
And there are very few venture capitalists in any industry that can say that, especially 5 years into a fund, halfway
Hmm.
through our 10-year
Yeah.
investment window for Fund One. And all of our companies are still alive, and most have had significant up rounds in their valuations. And so, on the back of the success of Fund One, we were able to go out and raise Fund Two, and that was 15 million.
Okay.
And so Now, on the
15
back
bucks.
of the success of Fund 2,
Yeah,
we're
fuck you.
trying to, do an order of magnitude change for
Yeah.
our Fund 3 that we're currently starting to take interest for.
Now,
And
as of
so
current.
learning to be realistic, learning to bite off small chunks that you can chew and be successful at that, and then use that to leverage yourself to the next level. Most
Hmm.
people, and I was guilty of this too,
Yeah.
they want to run straight for the end of the line, right? I'm going to raise that $50 million fund. No, no, Megan, you're not.
Hmm.
You start with your $1 million fund and you prove your thesis. And then you get your $15 million fund and you prove that that
Hmm.
works, and then you can take those bigger steps. And
Hmm.
so, one of the things that I coach my entrepreneurs all the time is that I know you're excited and I know you've got these big plans, but how can we make revenue at year two instead of waiting until year
You
seven when the final
Mhm.
version of your technology is available? Is there some subset of that technology or some software that's needed to run your hardware that could be useful to other people? And taking these kind of bite-sized chunks out of the business plan and finding a way to create value along that
Along.
stepwise path
Hmm.
is something that was a lesson I had to learn the hard way,
Yeah.
and one that I hope I can
I
impart
don't.
on my portfolio companies in a positive manner.
I personally, that's something I'm happy even touching that. Bite-sized pieces is something important. I don't know if it's an entrepreneur thing or just something embedded in us. We just want the whole ice cream right now. We don't really want to take a cone at a time. We just really want the whole thing. And one thing I've seen is that just biting off chunk sizes little by little, eventually you have the whole thing finished and you don't even know, right? So I mean, obviously, just starting off with a $1 million fund and then being able from there to go 15 million. Eventually, since you guys have it's like the individuals who came to you basically that took 18 months to get a product market fit. After they went and they came back, now they have a product. Now they got funding. So it just I guess
Exactly.
bite-sized pieces, and eventually you'll be able to raise more than you basically expect. But in terms of I guess raising capital, do you guys approach individuals who have previous investments in the space industry? Because I know that sometimes makes it easier. Because I have some investors that I work with, and when we're approaching investors for them, we typically approach people who have experience or have a history of investing into similar industries. So sometimes it can help with the raising the capital.
Exactly. And so we do right now, a lot of the investors that we're talking to for our Fund 3, maybe they've invested in industrial machinery before.
Okay,
So they
industrial machinery.
understand hardware.
Yeah,
Or maybe they've invested in tourism before. So
yeah,
they understand the appeal of the kind of space tourism side, right? Because there are very few institutional investors who
yeah.
have invested in space before.
Space. Yeah,
So it's much harder for us to find those
most
fits.
definitely. Gotcha.
Now, one of the things that SpaceFund has done throughout our history is that we publish primary research. I like to tell a funny story about as I was first learning how to use AI. I said, oh,
Hmm.
this is going to be fantastic. I can go out and find all of this research to
Hmm.
back up all of the claims that I make in my
Make.
public presentations and on my website.
Hmm.
And I ended up in this infinite loop with the AI who
Hmm.
kept coming back to my own papers and my own website as the
Mm.
sources to cite
Wow.
for the data I
Ah,
was trying
you
to
got
present.
that. God.
And so that's been a big problem for us when we're trying to explain to investors,
Mhm.
they want data, they want outside proof points. And
Yeah.
so we've published a lot of articles, we've published a lot of technical papers in peer-reviewed journals, etc., to kind of prove these points that we know to be true, but there isn't any research data
Yeah.
available for us to cite. So we have to have
Hmm.
our own sources to cite.
Yeah.
And one of the things that we realized as we're looking at these more institutional capital allocators,
Hmm.
one of the biggest factors that they use to determine how their portfolio is going to be allocated is by correlation. They want to make sure that they have a lack of correlation between assets. So if one market goes down, it's not going to affect other markets that they're
Hmm.
invested in. And so that's a really big part of their decision-making process. Nobody has ever asked the question, is the space industry correlated to
Yes.
any other investment
Hmm.
index?
Yeah.
Because nobody has seen space as an investable sector,
Yes,
right?
yes, yeah.
And so we just recently did all that research. It'll be published later this year by the AIAA, the American Institute of Aeronautics and Astronautics, as the first publication of its kind,
Hmm.
actually considering space as an investment sector. And so having that information available, because especially at this institutional capital allocation stage, it's not about emotions, right? Whereas a family office, you might be able to pull on the heartstrings of the person who runs the family office because they want to go to space, right?
Yeah,
Institutions don't make decisions that way. It's
yeah, they
very
don't.
much an analytical decision. And
100%.
now that we're this far in, we have results from our previous fund. That's a
Hmm.
great piece of that analytical part.
Yeah,
But then
yeah.
also having this data about the correlation, those two pieces, we can show significant growth and we can show lack of correlation. So
Hmm.
those are the two biggest data points that these institutional investors use, and we have to be armed with that data in
Hmm.
order to successfully convince them that this is a sector that they want to dip their toes into.
Hmm.
And so that's been a very difficult road, but one that we've
Hmm.
had to travel, just like the startups who have to prove product
Hmm.
market fit.
Yeah, PMF.
This is
Yep.
us proving our product market fit for our
Hmm.
customers, which are
Most
our
definitely.
investors.
Yeah, it seems like you guys' own is once again, just not on the hardware side of things, not by building the product alone, it has its own hardships, raising the capital alone. Because once again, you're just talking about how ChatGPT just resurfaced, giving you back your own information is like, you guys, but you guys don't feel as though you're too new to the market though, right? Because, we talked about that earlier, how being too early sometimes too can be a bit, be a bit of a detriment towards, investments and
So
basically raising
this is
capital and all that
this
kind of
is
stuff.
one of those market dynamics that I would say actually really worked in our favor. As disappointed as I was for my first fund to be smaller than my
1 million.
expectations, it turned out that our timing was just perfect. We
Oh
put
wow.
in a little bit of capital early on, and then a little bit more capital as the
Hmm.
industry grows. And so
Gross.
we're in a position where we are growing with the industry
Hmm.
as round sizes and the number of companies proliferates.
Hmm.
There's more and more investment opportunities, and there's more opportunities to deploy more capital. If I had raised $50 million in 2019, I might not have been so successful at deploying it because I might have just been, oh,
Yeah.
a little bit here, a little bit
Yeah.
there, a little,
Yep.
right?
Yep. Yep.
But instead, with a much smaller fund, it made me,
Focused.
being that constrained, made me make very specific investment decisions. And so I think that it's a go with the flow thing. The market will tell you what they're ready for, and you have to listen to the market. You can't
Most
bury your head
definitely.
in the sand
You
and
have
say,
to.
I'm raising a $50 million fund or else. The market
Yeah.
wasn't ready for, on either side, on the investment side, like the investors, or on the startup side. The market wasn't ready for a $50 million
Mm-hmm.
VC fund in 2018, 2019.
Mm.
I believe it is now.
Gotcha. Cool. I guess we're towards because we were supposed to go 30 minutes. I know we kind of exceeded. I know you got to go to do a bunch of other stuff, but I guess in terms of like routine or habits, because I think earlier we were talking about how people scrolling online, I guess, and all that kind of jazz. Uh, Nowadays, a lot of people doing different things. I have some people that I speak to. They're stuck doing rituals like 3 hour morning rituals that quote unquote supposed to give them productivity. They're journaling. Journaling is great. Meditating is great, but hey, it's how focus on the main thing is what's really important, which is a revenue generating activity, right?
It does. So I'm a big fan of taking the first 2 hours that I'm awake. I don't look at my email. I barely look at my phone. Just make sure like there's not been an emergency overnight. You know what I mean, kind of thing, right? And I just kind of stay off electronics and media, sit quietly, drink my coffee, ruminate on the day before and the day ahead, and don't let the outside world bombard me. Because the moment I do switch it on, it's hectic and it's crazy, and every day is different, and you never know what's coming at you. So that's my morning time, and my partners all know. Don't talk to Megan until after she's had her second cup of coffee. Right? That's the rule. Okay. That's the rule. I know it's a hard and fast rule with me. But then otherwise, it is difficult to plan because, like I said, every day is different. And with 20 different companies plus fundraising, you've got different demands and different things that you have to be prepared for. And so it's very hard to have a structure like a lot of people like, the first hour of the morning I'm doing emails and the second hour I'm doing this and then I'm in the lab in the afternoon. My, Unfortunately, my schedule just does not work out that way. And then you add travel into the mix. There's lots of travel, and so it becomes very hectic. But one of the things that I do to keep myself organized, I'm very old school. I use, you can't see because it's off camera on purpose, sticky notes. Sticky notes everywhere. I'm a big fan of handwritten sticky notes. I got them everywhere. So, oh, we got more over here, right? So, um, but for me, I've learned that, and I think this is the case for a lot of people, not everybody. When you actually physically write something, it gets imprinted on your brain in a different way than if you type it. And so I find that even though I've got the sticky note up here to remind me to do a thing or send a follow-up email, whatever, I often don't need the sticky note to remember it because I've done the act of writing it down, I've looked at it once or twice, and then boom, it's like, okay, I can just get that done. And oftentimes on meetings, it'll come out with, I've got 6 to-dos after the meeting. Well, I don't want to forget the fifth or the sixth item, right? And so I write it down, and then that really helps with my memory and my ability to follow through. And so if you're ever on a meeting with me and you don't see me with a pen in hand, remind me to write it down. Exactly. And then right here is my journal. This is where I do, yeah, this is, yeah. This is where I do my thoughts and ideas and things that I want to come back to later or a chapter I want to write in my book. That all goes on the journal. And then the sticky notes are for action items for work. And so keep it all right here. So that's a great question. There's obviously too much to do. One of the most important things that I've done throughout the course of this is build a team around me. And thankfully, I have amazing partners who I can say, I can't deal with this today. Can you? It's and then it goes both ways, right? I get incoming from them too, but it helps us focus on the things that each of us are best at, which is really important, is knowing what you're good at and what you need help with. And I think that's something that a lot of people have trouble with, especially founders and CEOs. They want to just take care of everything. It's not possible for you to do everything. Use your support system and let and sometimes founders have trouble with, well, it would take longer to train somebody to do this thing than it would take me to do it myself. That's uh, correct if it's a single instance. But if this is something that's going to happen every week, take the extra time to train the person now, and then 10 weeks from now it will have been worth it and you won't have that on your plate anymore. So that ability to figure out what you're good at and what you need help with and actually delegate the things that you need help with is something that I think a lot of founders struggle with, and something that I'm getting better at as as I mature in my business. I sometimes have some trouble with that. But then beyond that is, yeah, you do have to prioritize what's revenue generating, what isn't. But one of the things that I think is most important is prioritizing people, right? So there might be something that's potentially revenue generating, but there might be at the same time a personal crisis for a person that's important to me, whether that's in my career or my family. That always has to take precedence, is the people over the problem. And if you live your life that way, that I'm going to focus on doing the things for the people that matter, you're going to end up being much more successful than I'm going to do things for the dollars, because it's the people that end up creating the dollars in the long run. You're right. That's a great question, and I think one that has proliferated through our entire society is so easy to be distracted. But people like to blame social media for this. But I mean, if you look back to my parents' generation, they were out at protest. They didn't even know what they were protesting. They were just there for the party, right? So there's always gonna be there's always gonna be vices. There's always gonna be distractions. Okay, there's always going to be campus protests. There's always going to be these distractions in the world, no matter what form they come in. People used to think that television was going to rot your brain, and now social media is going to rot your brain, and all of that stuff. So obviously, there is definitely health evidence, scientific evidence that staring at your phone for too long is bad for your health. It's bad for your eyes, all that stuff. Okay, so I'm not advocating for being a social media fiend by any stretch of the imagination. What I'm saying is these things are not unovercomable, right? You can overcome that, and you can find things that you're interested in and start small. The way I started in the space industry was not with my first job at Deep Space Industries. It was as a volunteer at conferences, just sitting at the reception table, checking people in and getting them their name badges. Well, that allowed me to meet some of the most important people in the industry. That allowed me to eat lunch with all the other volunteers and the people running the conferences. And so it wasn't I had another job at the time. I think I was waiting tables at the time I started volunteering for these space conferences. And I remember one time when I was a college student still, I drove from Houston to Orlando to volunteer at a conference because I couldn't afford the plane ticket. So I drove my car to Orlando to spend 3 days volunteering at a space conference. But I was, let's call it in my early 20s. And so I still have friends to this day that I met at that conference all those years ago. And so start small. Don't put too much pressure on yourself. Say today I'm going to do one thing. I'm going to reach out to one person, or I'm going to listen to one podcast while I'm cleaning the house on whatever topic that is that's interesting for you, and then find ways that you can participate without having to say I have to have a career in this field or I'm not going to do it. No, find little ways that you can be useful, find ways that you can ingratiate yourself into the industry in a positive way. By being a student volunteer, I was able to meet some of the most important people in the industry, and then years and years later they knew who I was. And so I have that credibility of, oh, we've seen Meagan around at every conference for the last 5 years. She must be somebody. Let's put her on a panel this year. Well, yeah, being in the right place at the right time really matters. And if you're not there, you're not going to get the opportunity, right? Yeah. Yes. Yeah, so it's $1 million minimum for Fund 3, which again, going after those institutional type investors, kind of, and there's some math here that I won't bore you with the Securities and Exchange Commission and their requirements and whatever, but yeah. Yep, spacefund.com. It's very easy to remember. Another thing that shows we were first to the game, we own spacefund.com. All right. So, yeah. So, but yeah, so spacefund.com has all the information about our portfolio. So people who are looking for jobs and a way to break into this industry, It's a great place to start. Investors who are looking for more information and data about this industry, even if they're small investors, angel investors who want to put $10,000 or $20,000 into a startup company, the data that we publish, the things that are available on our website can help you be more informed about the industry. And we publish all of that as a service because we do want all of those investors, even if they're not a right fit for this particular fund that we're doing today, we want more and more interest both from the startup side. You've got a space idea and you want to build it. We have reality rating databases on our website where we go through every one of our sectors of interest and catalog every company in that sector. Find those sectors that have very few companies in them and go solve a problem in that sector, right? We want more companies and more dollars in this industry. A rising tide lifts all boats. Go take a look. Thank you very much for having me, Robin. These have been excellent questions. What a wonderful conversation. I really enjoyed it.